Stocks have been up recently. Should you buy now or later until their reporting season is over? The RBA minutes are out, so will the next rate rise be 0.5% or a big 0.75%? And ANZ's rights issue, good or bad deal? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Okay, Paul, stocks have been going up. Not necessarily on Tuesday, but they've been going up. Should you buy now, get on the trend, or should you wait until reporting season's
I think
over?
I think it probably pays in both markets, Peter, to wait till reporting season's out of the way. We're going to see some pretty big swings as new data comes out of the US. I think bottom line at the moment is that the market really doesn't know whether inflation has peaked or not.
Yep.
We've still got a question about the oil price. We've got
recession worries.
We've got worries about whether Russia's going to open the gas pipeline or not. What's that going to do to oil and gas prices? It all makes it pretty hard, and the market's looking for a reason not to buy. And earnings season is sort of the latest, both in the US, and we'll go into our earnings season here in early August. And I think you really need to see that out of the way. Probably to give the market any momentum. I think that's sort of if we get a good earnings season, then the market can say this was a bottom.
Yeah.
But if it's a bit mixed, I suspect it's still going to be, one of those sort of, choppy markets without a lot of headway to be made.
Yeah, I think risk takers buy now and keep their fingers crossed that reporting season doesn't hurt them or problems in the Ukraine pushes the oil price up again. But I think the cautious investor has time on their side. Wait to reporting season the other way. Even if you miss the first 5 or 7% of an uptrend, well, so what? At least you're on a rising trend rather than the possibility of another leg down. Okay, that's the first one, Paul. Let's go to the RBA minutes. And a lot of people are worried about a 0.75% rate rise in the first Tuesday in August when they meet. What do you reckon?
Well, the RBA minutes were out yesterday, Pete, and I think if you read the minutes carefully, you'd probably walk away and say that it's no more than 0.5%, because the Reserve Bank recorded an interesting comment. They said that really one of the key determinants was long-term inflation expectations.
Yep.
And they were worried if they were sort of increasing,
rising,
potentially they'd have to move interest rates a lot higher. And they basically said they're under control. And the discussion at the last meeting was still about a quarter versus a half. It wasn't versus a half versus a three-quarter.
Yeah.
So the RBA governor will speak today, important address this morning, but I think if those minutes probably point to another 0.5% on the first Tuesday in August.
I guess the curveball will be July 27 when we get the next CPI number. If it's outrageously big, they might say we might need to hit 0.75.
Yeah, I mean, look, I guess that's probably, you're right, Pete. And if you look at all the inflation data, if you look at what's been going globally, it's all been on the high side. Every single country, inflation seems to be coming out higher than expected.
But we are a better country.
We are a better country, and so I guess the odds almost favour a bad result again in July. And if you're right, if it's bad, well, maybe that'll push them over the edge. But look, we're a week away out from that at least anyhow. That'll be Wednesday week or a week today. But I think the minutes, at least at the moment, suggest that they're really not thinking any more than 0.5%, mainly because their view about long-term inflation expectations is still pretty good.
Yeah, but let's face it, our inflation performance is better than most Western countries. As I say, I don't want to be one-eyed and biased, and is it jingoistic? But Australia is
go Aussie inflation, right? Or go
best
Aussie
economy,
right?
best country.
Yeah.
All right,
the best country for the lowest inflation.
But
right?
unfortunately, we can't beat England in rugby. Anyway, let's go to the next one. Stocks have been, the ANZ rights issue. That's the one a lot of people care about. In fact, I got a client wrote to me today, Pete, tell us about it. I said, well, Paul says it's a no-brainer.
Well, I think it's going to be a no-brainer to participate. Now, we'll get it, if not today, at least by first thing tomorrow morning, we'll find out how the institutional offer went.
Yep.
And that I think will go pretty well because this $3.5 billion raising's in two parts. There's an institutional offer where all the institutions get to effectively take up their rights, and any rights that aren't taken up are auctioned.
Yeah.
And that gives you an idea of the number of percentage of institutions who participate and how much is left over and how aggressively those are taken up at a premium price. That gives you an idea, it tells you how keen the institutions are. And then the last sort of 25 to 30% is covered by retail investors, you and I. And we've actually got 3 weeks to make up our mind up because that's at a fixed price of $18.90. I suspect it'll go really well and that this will be seen as a really good offer. For 4 reasons. One is there's a relief that the MYOB deal is dead. That was a
dud deal.
A dud deal has sunk the share price.
Done deal. A dud deal.
Yep. 2, this is, by and large, a reasonable deal for the ANZ because it's back to its knitting. It increases its market share in a place like Queensland, which is a core growth market.
Yep. It'll change its colour from blue to maroon.
It changes its colour to 19%. It gets its home loan book back up, and becomes the 3rd biggest bank.
Yeah.
I'm not saying it's not an approved deal, but let's just look at the deal as it stands. Thirdly, people will say they paid too much, but you get that with every deal. They probably did. And this integration savings will take years, and they probably will, but maybe even ANZ can't muck this up because it's going to take so long. It's in the never, never. And finally, the share price has come down so much. ANZ is so cheap, really, because it has been an underperforming bank. This is a discount to the share price last week. It's a no-brainer. So I think you'll find that people will say, yep, most of the bad news is out. This is a good one to participate.
Let me throw a curveball question. I hadn't thought about this. What about the Suncorp share price? Do you buy Suncorp or do you wait?
Suncorp share price on the day it was announced rallied about 6%. Yesterday it was down about 4%. Now I put that down to 2 factors. First of all, this is a good deal for Suncorp because they've got they'll end up with about 4.2 billion, I think, memory in cash as a result. They've got to take away there's some costs and so forth. So they'll end up with about $4.2 billion of extra cash that they'll be able to throw back into the insurance business. And if on the one hand we're saying ANZ paid too much, well then it's a good selling price for Suncorp. And that's why the share price rallied about 6% on the day. Yesterday it came off a bit because there are always questions about whether the ACCC's got to say yes, Queensland government has to change some legislation, and the Federal Treasurer, although he'd be very reluctant to go against the ACCC, he still needs to approve it as well, and he's a Queenslander. No,
correct.
Although he's fairly straight talking, so I think ANZ's done their homework, and this will get approved. But you can sort of see. Unions aren't happy, and so if you get a whole lot of noise about this, it could be a bit more challenging. So maybe, it won't stop the capital raising for ANZ going ahead, but it might stop the actual deal ever happening and Suncorp ever getting paid. So watch the Suncorp share price, but I think people will still say it's a good deal for Suncorp.
And an interesting thing, what happens to the dividend of Suncorp, which has been a very good dividend? Would you expect it to fall, Paul?
Yeah, so the dividend of Suncorp should adjust because this was about 50 to 60% of its earnings. It had done better recently when insurance had been down, and go back a couple of years when insurance was up, banking was a smaller contributor. So the Suncorp share price dividend will adjust. Now, they might do a couple of things. They've got all this capital, right? So they might actually look to buy back some shares. They'll build their reserves. There might be a special dividend coming out. Who knows what's going to happen? There'll be some adjustment to the Suncorp dividend, assuming they don't buy some shares back, Pete.
Yeah, it's a good question. Not a bad answer either, Paul. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.